What are the fundamentals impacting the 30-year Treasury bond futures?
Well, it appears that the fundamentals are evenly balanced in the 30-year Treasury bond futures. It looks like central banks are still likely to be more accommodative in response to the weakening global economy. But at the same time, there is going to be, I believe, a lot more fiscal stimulus. That would be an offsetting factor. So the range that we are currently in the 30-year Treasury bond futures, I think will continue for quite some time, and breakouts are likely to fail in both directions.
June gold futures are in a triangle congestion pattern on the daily chart. What is the rule of thumb for triangle congestion patterns?
So it appears that the June gold futures are in a triangle congestion pattern. And a rule of thumb on congestion patterns, including triangle congestion patterns, is that prices usually break out in the same direction that they came into the pattern. And in this case, it appears that there will be a breakout to the upside. Also, I think there is likely to be enough momentum for futures to advance to testing the recent highs in the gold futures. So higher prices, in my opinion, are likely, not just from a technical point of view, but also from a fundamental point of view, as central banks continue to be aggressive buyers of gold.
In light of the current global economic situation, are interest rate policies from central banks going to become even more accommodative? Or will there be more fiscal stimulus coming from a group of 7 countries?
Well, actually, I think we're going to see both, although there is not as much room as far as the situation for central banks to lower interest rates. We already have rates here in the U.S. at basically zero, rates in the Eurozone and in Japan at negative. So not much room to lower rates further, but there does appear to be more room for more fiscal stimulus from countries around the world. And I think that is exactly what is going to be the case. In fact, even today, the German finance minister indicated the possibility of more coordination between EU countries and G7 countries. So most likely more stimulus is coming, but I think it will be more likely in the case of fiscal stimulus than central bank stimulus. Either way, there is a lot of support coming our way from not just central banks, but also from governments.
Corn futures continue to trade lower. Will this continue? What will it take to find support and push prices higher?
The corn market prices continue to trade lower because of the drop in demand. First, ethanol, now concern about livestock, and then maybe on the export side. So we could add 500 million bushels to the 19 and 20 corn carryout. If we look ahead to 2021, on May 12th, USDA will come out with the first estimate for supply and demand, and a big crop, continued concern about ethanol demand, and we could actually see a carryout over 3.5 billion bushels. Trade in this marketplace in D's corn below the 327 area suggests that we could actually trade lower into the summer without a weather problem.
Wheat futures are also trading lower. What are the fundamentals pushing prices lower?
The wheat market has also seen better weather in parts of Europe and also southern Russia. This has weighed on most world prices. There's also a steep discount in nearby Russian prices versus new crop, maybe as much as 70 cents a bushel. So we're going to have to watch world buyers and see how much wheat they're going to buy. On the other side of the coin, about 30, maybe 35% of the U.S. hard red winter wheat belt is seeing dry weather, and that could lower the crop there. USDA on May 12th will come out with their first estimate of winter wheat crop production, and there's numbers floating around 1850 million bushels versus 1920 last year, hard wheat 690 versus 833 last year, and spring wheat and soft red winter wheat 300 versus 239. So we probably could see the spread between Kansas City and Chicago narrow, with Kansas City gaining on Chicago.
Soybean and soy meal futures are trading lower. What are the latest fundamentals forcing prices lower?
As far as the soybean market is concerned, I think a lot of people were hoping that phase one of the deal between U.S. and China would be agreed upon, and China would come in and at least buy U.S. soybeans. They are buying pork and they are buying sorghum. But over the weekend, there was strong tension between U.S. and China, and so the Phase 1 deal may be in question. This could add, if they don't take, let's say, 7 or 9 million metric tons of beans oat crop, this could add anywhere from 150 to 250 million bushels of beans to our carryout, and carry that through to 2021 could also increase the carryout. Now, right now, on May 12th, the trade is thinking that maybe the USDA will show a 2021 carryout around 300 to 350 million bushels. That could be supportive to prices.
What will the USDA say on their May 12th report and their first estimate of U.S. 2020-21 corn, soybean, and wheat supply and demand report?
On May 12th, the USDA is expected to show a corn carryout around 3,500 million bushels for 2021. Soybeans maybe 350 and wheat maybe 770. The wheat and corn number could be supportive as long as we get some positive headlines on the virus and reopen the U.S. economy and start getting the economy growing again. So again, prices on the defensive until we know more about U.S. demand, U.S. weather, and headlines on the virus.
The views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.